All right, guys, morning, afternoon to some. Highlight of the day is going to be compare contrast NASDAQ to the ES. One makes a high, the other one doesn't. Most people don't realize it because they're not watching this. Then they don't know what to do with it. Two things that go into this analysis, and this was right at about the bottom of the hour at 9 o'clock. What we had was, first of all, a move lower. If you listen to any of my stuff, what I talk about is always rotation, like following a bird in the sky. That's how price is moving. All right. So you had a strong move in here. All of a sudden, this retracement comes pretty deep to this move. And we talked about that as it happened. When you get a retracement that goes from that X up there to this X, and it's deep from that move that went from there to there, all of a sudden, you begin to question or scratch your head as to how much do the bulls have left to have some continuation in making higher highs. You begin to see the torch, at least temporarily, change hands. The depth of the retracement, all right? So generally, and what we say is that if it's going to go back up, it's not going to go straight back up. It's going to probably have to go sideways for a while before it re-rallies. Generally, it's going to retrace about halfway and then resume the downside, because most people don't see and read the market properly and see the depth of that, taking the bulls off their game a little bit. Why does that happen? Because that's the most important part of this analysis. If it's too deep to the rally, it caught more longs trying to buy it on the way down, opening up long positions. Because they all see this rally, they see this rally, and they're looking to buy a pullback to take advantage of the next rally. But if the pullback is too deep, you're starting to collect too many longs or more longs. And if it becomes too many, what do we know? If you listen to any of my videos, longs equal sellers. If you undress a long, there's selling underneath them. Longs equal sellers. If you have a lot of longs, you have a lot of sellers, period. It makes it hard to go straight back up and re-rally if there's a lot of sellers. So it's one reason why the depth of a retracement off some strength gets you to scratch your head that actually the market could be weakening up, stacking probabilities. So that was the one thing we noticed when the market kind of retraced this far, let alone this far. If you're bearish, now you start playing it from the short side. Here was another thing to back that up. Our friend, the NASDAQ. I want you to watch this. This is really important. The NASDAQ comes in, and I want you to watch a couple things. The NASDAQ became a little bit stronger in this sequence and came up with the old-fashioned divergence. What do I mean by divergence? Divergence means markets are always going up and down. They're making a high, then they're making a higher high here to here, then they make a lower high. It's part of reading a market. And they make a low here, then they make a higher low and things like that. Failures and different attempts to make achieve different prices. The NASDAQ clearly makes a higher high. This was their high right there. They clearly make a higher high in there, and they extend it. They're making a higher high in this sequence. Well, the NASDAQ is a stock index just like the ES. So you would assume in that same time period, we would make a higher high. Look at it. It was a good 3 points away from its high. So in real time, I said, we got a divergence happening here. Not only is the depth of this move or the length of this move deep compared to this rally, took away this whole rally in this move, but on the re-rally, on the bounce to try to succeed and make higher highs, it was 3 points away while the NASDAQ was making higher highs. So it's an intermarket divergence. When you compare two markets, that's how you start comparing them. Why is one making a higher high and the other one isn't? It starts to tell you that the NASDAQ potentially could be expensive, which means it's probably going to go down. Anything that's expensive is going to go lower in price eventually. And or the ES could be, and definitely is showing weakness, right? If this is true, the next right side of the market's the downside. It's a really important and valuable way to predict and to compare and to contrast. In this case, the S&P and the NASDAQ. This is what appraisers do with a house before they give, before a bank will lend you money. They hire an appraiser. Their number one technique is to compare this house that's for sale with this house that sold 2 months ago. And round they go. Compare, contrast. It's not the same exact house, but it's similar, and it's in a similar location. The ES and the NASDAQ aren't exactly the same, but they're going to chart similarly. When they don't chart similarly, and one makes a higher high and the other one isn't, you get into the NASDAQ might be expensive and the ES might be showing weakness. They're definitely showing weakness here because it's not making a higher high through the 11s. Does that mean you know the exact spot to sell it and life is good? Of course not. But it goes to the story you're starting to build to say the next right side's the downside, the depth of this pullback. And on the rally, it had the NASDAQ giving it fuel to make a higher high because they were doing it, and there was that decoupling. Now you add the puke tool that we have to pull the trigger, and you got the right side licked, meaning you're on top of what your opinion is, stacking probabilities, and you use this puke tool to show when other shorts get knocked out. Because if you're bearish, that means you want to get short. And if you want to get short, you don't want to do it with a lot of other knuckleheads. You want to push those shorts off the boat and then get short. That's what our puke tool shows us. You know, into depth in a whole nother webinar, and we have that on the Edge website, edgetradinggroup.com. If you watch our videos on YouTube, make sure you subscribe to them. We get to 1,000, we do live videos. But this is stuff we talk about in the room every day, and we go back, and there's nothing more valuable in this world than repetition. Have a safe day. We'll see everybody tomorrow. For room guys, we're opening up early for the unemployment report. For YouTube guys, unemployment report comes out Thursday, not Friday, because of the 4th of July weekend, holiday weekend. So there's a 7:30 a.m. Central Time release on a Thursday, not the Friday. Big report, big miss last month, plus 2.5 million non-farm payrolls added in the month of May. And this report prints 7:30 Central.